So, if you have been dreaming of building wealth without constantly worrying about your finances, you are not alone. After 15 years in the financial industry, working with clients who have portfolios over millions of dollars, I've learned that 99% of wealthy people follow one simple yet powerful strategy. And it's so easy, you will wonder why you haven't started already. And the best part is, you can do it yourself. This strategy allows your money to work for you 24/7, helping you achieve a stress free life. So, say goodbye to sleepless nights over market trends and overcomplicated stock picking. Instead, embrace a straightforward plan for effortlessly building wealth. So, if you are ready to make your money work smarter and not harder and aim for financial freedom, let's get started. Because here's the real truth that transformed everything for me at a young age. If you are trapped in a 9 to 5 job, trading your time for money and not letting your money work for you, you will never gain the freedom to truly enjoy life or pursue your passions. And it's a tough reality if you think about it. But once I understood this secret, everything in my life changed for the better. So, the best strategy for building wealth is to save money each month and invest in the stock market to earn returns on your investments. Why? This is essentially free money working for you, thanks to the high returns the stock market can offer. And the best part is, this is backed by data, so don't take my word for it and check it yourself. I'm telling you only stuff that works for me personally for years. And therefore, looking at the S&P 500 over the last 30 years, the average stock market return is 9.9%. So let's break it down with some simple math so you can see it yourself why it is so crucial. You are essentially building yourself a cash machine for the years to come. And here's how it works. If you invested $500 per month with a 9.9% return over the last 30 years, you would have accumulated over $1 million. But here's the best part, and also the secret what a lot of wealthy people don't tell you. You would have only contributed $180,000 of your own money. The remaining part of $831,000 would have been earned through the returns on your investments. So, yes, when you do it this way, your money is working for you, not the other way around. So, do you see how important this is? Instead of trading time for income, you are allowing yourself and your investment to grow and generate returns on their own. The simple strategy is the power of compound interest, where your money grows exponentially over time without requiring extra work on your part. This is a smarter and more efficient way and a more efficient path to building wealth. And what I've noticed over the years is wealthy people constantly use the same strategy. It's so easy if you think about it. And this is exactly the advice of a wise man named Jack Bogle. Jack Bogle was the founder of the Vanguard Group and a pioneer of index investing. And with that in mind, let's hear what he has to say.
No, my theory is not subject to the ups and downs, the peregrinations of the stock, the unpredictable peregrinations of the stock market. It's painful to do, but I think the idea of owning the stock market is the best approach to equity investing, and perhaps I didn't make that thoroughly clear there. I have never felt that equities should be the only portion of an investor's long-term program. I myself am about 50% stocks, 50% bonds, for example. I was brought up when I came into this business in 1951 with the Wellington Fund, which was and is, and I hope always will be, a conservative balanced fund. But I think the idea of buying and holding forever and not trying to make adjustments requires that you've gotten it right in the first place. That you can only hold tight if you've bought right, if you will.
Now that you have heard from Jack Bogle himself, let's dive into a simplified investment strategy using a 3 ETF portfolio aimed at achieving financial freedom with minimal stress, which you can set up easily yourself. But before we rush into the ETFs, let's clarify what they are. But before that, I always believe that everything happens for a reason. And your decision to watch this video right now is a good sign that you are on your way to letting money work for you. So if you are enjoying my video so far, please subscribe to my channel so I can guide you along the way on your journey. So, are you subscribed? Let's dive into an ETF. An ETF, or exchange traded fund, is a type of investment fund that holds a collection of assets such as stocks or bonds. They are traded on stock exchanges, making them a flexible and cost effective way to invest in a diversified portfolio. By investing in an ETF, you're essentially gaining exposure to around 10,000 companies, meaning you own a small part of each company, including well known names as Apple and Microsoft, for example. So I've divided the ETFs into three different parts: one foundational ETF, one dividend ETF, and one growth ETF. Let's start with the foundational ETFs. These are the building blocks of your investment plan. They create a strong foundation for your finances that you can easily build on and adjust. Now, onto the recommendations. Consider the Vanguard S&P 500 ETF, the VOO, and the Vanguard Total Stock Market ETF, the VTI. These ETFs have consistently weathered markets ups and downs, offering robust returns over time. And I will tell you more on that later. When you think about the returns, the Vanguard S&P 500 ETF, the VOO, which is focused on the 500 largest US companies, has returned 13.33% per year over the last 10 years. And that's amazing. And then the VTI. The VTI, which is more globally diversified across 3,700 companies, has returned at 12.78% over the same period. And the best part is that they also have low cost of just 0.03%. And this is a crucial lesson. Keeping costs low while investing is essential for maximizing your returns. And that's also a key point emphasized by Jack Bogle, the founder of these ETFs.
Problem is, in the financial business, value and cost are the reverse sides of the same coin. When you go into Costco or anything else you can think of, there's a value in your mind. You buy a Mercedes-Benz, you got a lot of value out of driving. Now, I don't know why anybody would get any great pleasure out of that, but maybe it's pride. Maybe they think Mercedes-Benz is a new star somewhere in the sky. I don't know. But you can't directly associate the cost with the value. Mm-hmm. But in the mutual fund business, it's how the returns are divided up between the marketplace and the investor. So this is a hard business to do it in without giving up your profits.
So, drawing from my experience advising clients with portfolios over 10 million and more, it's crucial to research and grasp the fundamentals of your investments before jumping in. If you want to explore these ETFs further, check out my other videos on this channel or drop your questions below in the comments. So you might be wondering, but Maurice, how can I choose the best ETFs and which one gives the best returns for my situation? In this video, I've got you covered, because in the next couple of minutes, we will uncover the clever trick that many wealthy people use. And one key aspect of this strategy involves dividend ETFs, which serves a straightforward purpose: delivering investors a reliable income stream through consistent dividend payments from the stocks within their portfolios. These investments are particularly appealing for those seeking both stability and income, especially during times of low interest rates, as they offer an alternative to fixed income options like bonds. Dividend ETFs are ideal for reinvesting dividends to compound returns, or for individuals nearing retirement who prioritize consistent income. So imagine your investment strategy as a sturdy ship sailing through a financial seas, navigating towards safety and a steady stream of cash flow, much like a reliable compass. So, what kind of ETFs would I recommend? So, consider the Swap US Dividend Equity ETF, the SCHD, and the Vanguard Dividend Appreciation ETF, the VIG, as your guiding stars. These ETFs offer two key benefits: safety and regular income from dividends, with the potential for value growth over time, like a lighthouse guiding ships safely to the shore. The Swap US Dividend Fund aims to closely follow the Dow Jones US Dividend 100 Index, ensuring that you as an investor capture all the gains possible. And therefore, over the last 10 years, it has delivered a return of 11.7% per year, making it a strong option in your investment mix. It focuses on reliable dividends from strong companies. Similar is the Vanguard Dividend Appreciation ETF, which has provided a return of 12.11% per year during the same period. This fund tracks the performance of the S&P US Dividend Growers Index and invests in 340 underlying stocks. Both of these ETFs not only offer attractive dividends but also have the potential for appreciation, making them safer choices compared to bonds, especially given the current low yields in the bond market. Incorporating these strategies into your portfolio can significantly impact your overall returns, and you will be amazed at what's possible when you do. Now, let's explore the last part and keep it really simple for you, so I'm setting you up for success with fast steps towards action. The growth ETFs. What is their purpose? These ETFs aim to have higher potential returns, but keep in mind that they come with higher associated risks. It's essential to be cautious here and avoid investing in things you don't fully understand. So I recommend considering the following growth ETFs: the Vanguard Growth ETF, the VUG, the Swap US Large Cap Growth ETF, the SCHG, and the Invesco Nasdaq 100 ETF QQQ. So the best part of all is taking action and really letting your money work for you. However, there are some important lessons to learn. If you jump in too quickly without being aware of the fluctuations along the way, you may feel insecure about your investment decisions. So it's crucial to understand that you will encounter market fluctuations and you need to manage your emotions throughout this process. And therefore, in this video, I will break down what kind of market swings you can expect. I will demonstrate how you can achieve impressive returns with minimal complexity, perfect for those aiming for long-term financial freedom. So if you are curious to learn the secret strategies that wealthy individuals use to maintain their wealth, be sure to watch the next video. See you later.